Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. US markets, they are just consolidating with the negative bias. Today, they may be making some bigger move because the personal consumption expenditure data will be coming today. That will decide the direction. The US Fed will always be looking for this personal consumption expenditure data. Asian markets, as usual, is mixed. Some negative, some positive, but surprisingly, Chinese and Hong Kong markets are higher. And looking at the GIF Nifty, so GIF Nifty indicating about 50-60 point higher opening. Yesterday, the mid cap mayhem or small cap mayhem also came. As per some report, in 2023, 23,000 crore came into the mid cap mutual funds, 41,000 crore came into small cap mutual funds, but whereas there was an outflow of 3,000 crore in large cap. And in fact, this is the 2023 data. Remember, in the last 2 months, November and December, there was a very, very big rally. So logically, after that, January, February, the inflow must have been more and more. So probably this is where the SEBI is worried. Now, what happens actually? More prices appreciate, people put more money in mutual fund, having the faith in the market, more money coming into the mutual fund, so they have to invest in the market. So they go and buy some more, again the prices go higher. So it's a vicious cycle. It keeps on moving higher and higher. And what happens, when the correction comes, okay, all the people want to go and redeem their mutual fund at the same time. So that can lead to a very big crash. So logically, large cap stocks can take more money, but whereas small cap and mid cap, it cannot take too much money, but that is what is actually happening. In fact, if you can remember the very famous fund manager, Porunji Valiant, the rise and fall. So his rise was, meteoric rise. But too much people, too much money went to him, and then he is a small cap and micro cap investor, and too much money went into that. So that money itself was responsible for the prices going higher. When the selling came, so it was very, very difficult. And many of these smaller small caps and smaller mid caps, when you want to exit, the markets will not give chance. It will keep on going for a lower circuit, so you cannot even do that. So what SEBI has done is right, but the timing is wrong. This kind of announcement should have been given on Friday evening, so that Saturday and Sunday, the people can think rationally. The Monday, there will be no knee-jerk reaction at least. But what happened, this kind of news comes during the market hours, okay, the sudden selling, when the market falls, nobody knows why the market is falling, they just go with the trend, so they keep on shorting the market. So this is a vicious cycle. So this vicious cycle is a big problem for stock market, right? So whatever, so we have no control over what SEBI does and when the SEBI does. So in my opinion, what SEBI has done is right, but the timing is wrong. So they should have announced it on Friday evening. So yesterday it was a clear knee-jerk reaction. So what is going to happen going forward? So there may be more selling in small caps and mid caps, but where that money will go, if that money flows back into the large cap, so then at least the Nifty can do well, right? So if that money is getting out of the market, and then Nifty will also see a collateral damage. So coming back to stock specific, Reliance Industries is media business is merged with Disney, but price wise there is no impact, because if we can remember, one particular day Reliance Industries shot up 6-7% for no reason. So all those things is because of this. So this might have been factored in already. So the Reliance GDR, there was no impact. Yesterday, Reliance was down about 1.5%, 2%. Reliance GDR is also 1.5%, 2% down. So this news, this is not a surprise because, people know this for a long time. So it has been in the news. So whatever, is already in the public domain, that would have already been factored in. So bulls desperately want to keep markets above 22,000 today, but let us see whether the bulls succeed. The bears will like to close the Nifty below 22K. Today it will be more interesting trading session. Today is expiry, but the futures were trading at a very big discount. I think the Bank Nifty 150, 200 point discount. Today expiry, it has to align with the thing. So which means that, the futures player are expecting Bank Nifty to fall at least 200 point. Even if the Bank Nifty fall 200 point, these people who shorted future will not make any profit. So today we have to see whether the hangover continue or sanity returns to the market. If sanity returns to the market, at least the large caps should do well. And mid cap and small cap may come under selling pressure, but large cap should do well. So normally, how a bull market should work, I tell you. In a normal bull market, large cap must go higher first, then followed by mid cap, then followed by small cap, then followed by penny cap. Okay. So then once the euphoric stage reaches, when the market reverses, okay, the first it will be the penny cap that will be falling, then mid cap will, small cap will fall, then mid cap will fall, then the large cap will fall. So at this time, what has happened in 2023, it was an unusual bull market. And, small cap did extremely well. Small cap and mid cap have given nearly 50% return in 2023, whereas the large cap did not even give 20% return. So, therefore, it's a better place. In fact, last week also I came out with a video cautioning the mid cap rally. So, I don't know, it's a mid cap rally or mad cap rally. So, it is definitely time to be cautious. So, what SEBI has done is right. So, yesterday I gave a strategy with a bullish bias. Things have gone completely wrong. So, what are the learning point? Number one, always expect the unexpected in stock market. And number two, if you are a very, very short-term trader, stop loss very important. And or if you have got enough margin, additional margin, you can also do the firefighting. Right? You can take some counter positions and this and that. Right? So what has happened, when my friend called me yesterday, so he said he changed the mind. Now the markets are bearish. So I told him to take some counter position quickly. I told him to buy 22,100 put option, sell double the quantity, 21,900 put option. So if the market, not falling much below 21,900, so this will give some profit. Okay. So of course, there are many other adjustments which will be difficult to explain here. So that's what we discuss all these things in our workshop. So I'm excited to go to Bangalore this week. So this Saturday, Sunday, we have a workshop in Bangalore. So the response has been really very, very good. So this whole industry is actually, I would say in a doldrum, I can say, I know many trainers who have been training, conducting training sessions almost every week. Now for the last 6 months, 1 year, nobody is doing anything. So this dried up, okay, but people are still interested in my workshop. That's because my famous words, okay, we sell business, we don't sell dreams. So the people who attend our workshop, we teach them how to make some decent return, but we don't promise them any sky high return. So I think if I talk more, then this will become a promotional video. So let me stop here. So hope you enjoyed watching this video. Thank you for watching.